All right, we are live. Thank you, everybody, for joining. We're going to give it just a minute or two to let a couple people trickle in. But as we do that, we can start off with just a quick introduction. So first of all, welcome to the webinar on how to sell your Amazon FBA business. My name is Andrew Laird, and I'm the Senior Account Manager at Mayan. I am also an Amazon seller myself. I own two different brands. One is called ProShot Case and the other is called Title Sports. We create and provide products for the underwater world, and I've been selling on Amazon for about 6 years now. Vero, do you want to take it off?
Sure. My name is Veronica Hardon. I'm also an account manager / data analyst here at Mayan for about 2 years. Before this, I also was very involved with M&A World. I actually led a valuations team for a brokerage firm in New York.
Great. And Ray, last but not least.
Yeah, fantastic. My name is Ray Preston. I'm the VP of Sales at Flippa.com. We are the world's largest marketplace to buy and sell digital assets. And as you can imagine, Amazon FBA takes up a big piece of that.
Great. Well, thank you both for joining us today. I'm really excited about the presentation we have ready. And with that, looks like we have some people who have joined. So let's just jump right into it. So first of all, just want to say that, at Mayan, we are an advertising optimization platform, and we've been able to provide really great results for our customers. This will be available at the end of the show, but we do offer free advertising audits where we can show you exactly what plan we would implement in order to help you grow your business and potentially, reach that exit. So for the agenda today, we are first going to talk quickly about current trends and some forecasting, what's been happening in the M&A market in 2022 and what we're expecting for 2023. We're going to talk about some of the logistics of selling your business, what type of things you need to get together in order to present yourself as best as possible. We have a whole section on knowing your numbers and doing your due diligence. Then we're going to talk a little bit about the role of advertising and what type of optimization you can implement in order to give yourself a potentially better multiple and a better price at the end of the day, which is, that's really what we're all looking for. Then finally, we'll close with a case study of an actual business sale from Flippa. So getting into it, the past couple of years has been quite a roller coaster. We've been dealing with COVID, we've been dealing with wars, with inflation, with what I would call maybe an uninspiring political environment. But underneath all of this, the real bright spot has really been the e-commerce market. That's why I love working in e-commerce. I've seen this trend over the past 10, 15 years of consistent growth, and that's what gets me excited about working in this industry. But e-commerce has been sort of the one area that has continued to chug along and continues to grow year over year. Obviously, we saw a pretty large increase in e-commerce adoption during COVID. It obviously made sense. A lot of us were sheltering at home. We didn't want to get sick. And we saw pretty significant, you can see, this is what we are seeing as a percentage of total sales were coming from e-commerce. There was obviously a huge spike during early 2020, but we've really seen, while some people have started to shop, go back to stores, shop retail in person, we've still seen consistent growth quarter over quarter in e-commerce. And that's what we can see here in the next chart. Here we go. During the early 2020s, we saw huge increases in e-commerce growth, up to 50% per quarter.
Hey, Andrew.
This year is a little bit smaller.
Andrew, sorry to interrupt. The screen is quite hard to see, so I'm going to suggest actually I do a share to see if maybe it'll be a little bit less choppy.
Okay, yeah, let's try that.
All right, one moment, everyone. Sorry, I wouldn't have paused it if I didn't think.
Are you guys seeing the same thing, just a little choppy screen? Gotcha.
One moment.
Okay, thank you, host.
Is it better for everyone now?
Yeah.
Much better.
Okay, so tell me when to move next.
Okay, next slide, please, Julia. So sorry, getting back into it. What we saw was, we were seeing decent e-commerce growth before COVID. Then, once it hit, we saw 50, 40, 44, 46% year over year growth during that period. While it may look like things have slowed down, this is on top of the gains that we saw during COVID. So we're still growing, in 2022 in high single digits. We'll still see what the final numbers are at the end of the year. But we're expecting somewhere between 7 and 9% growth in e-commerce in general. You can go to the next slide. So, Vera, I'll let you help me out with this, but basically what we're seeing is that while multiples had been a little bit crazy during what Ray calls the COVID wars, or the aggregator wars, what we've seen is that multiples are still relatively high for high quality assets. So Vera, could you just give us a quick definition of the different types of multiples that we see and how you should think about this?
Yeah, so to talk a little about multiples before Ray dives into like what actual numbers, as the name might suggest, a multiple is basically the multiplier that gets applied to your earnings, whether that might be EBITDA or SDEs, and we'll talk a little bit about how those differ, to then get to the value of your company. So it's kind of a quality score. The more stable your business is, the higher the profit margin, growth rates, and other metrics that overall all the buyers will look at, the higher the multiple you can receive. And as I was saying, most of the time, if you're a big business, you will get applied to EBITDA. That's your classic definition of earnings before interest, taxes, depreciation, amortization. If you're on the smaller side, it will be likely applied to what we call seller discretionary earnings. And this is an industry standard. And that just basically means cash flows or net earnings after any discretionary, as the name suggests, or optional expenses are adjusted. And this might be expenses that you're including but don't actually relate or are necessary to maintain the revenue levels of the business. So for example, if you as the owner are including your own home, or maybe you're overpaying for a service or a family member, whatever that may be, then those can be adjusted down if they're, again, not really value driven. Likewise, if there's any cause that you might be avoiding or might be help prevent because you're doing the work, but that a new owner would need to kind of take on, then those expenses would be added in. So it's a definition of both adding in or removing expenses to get to a real picture of what the expenses are that relate to the revenue level that you're at.
Great, that's helpful. So, for example, as a business owner, I sometimes take trips to do, underwater photography. Is that something that could be added back into those SDEs to potentially get a higher valuation at the end of the year?
Yeah, I think in that case, we probably wouldn't still need to add in some costs for the marketing, but probably the whole amount of the trip that you might be adding in, for tax purposes, is not really necessary, right? And so those would be adjusted.
Great. Okay, next slide.
Let's talk multiples. So yeah, I like to joke about the aggregator wars, but we really kind of did go through it over the last couple of years where so many different aggregators popped up. At one point, I think there was well over 200. And I think we're down to about 90, 95 now at this point, and they're starting to kind of shrink. However, what we're starting to see is multiples starting to settle after the craze of massive multiples that we were seeing even just a year and a half ago. We were seeing businesses in the sub 100K valuation range, selling at 3, 4, 5, 6x SDE multiples or EBITDA multiples. And then as you got into 7 or 8 figure valuation assets, we were seeing stuff as high as 8 or 9x sales, which candidly was a bit high, right? We're starting to see them settle. We're looking at a slide here that is showcasing some of the assets on Flippa that are listed and have sold. And in the sub 100K range, we're seeing everything up to 3x. Occasionally, you'll see a 3.5 or 4x SDE multiple. Typically, those smaller assets operate on SDE. If you go to the next slide, we'll look at some of our larger $1 million plus assets, and you'll see the range creeping up to 5x EBITDA multiples. And we'll even see, as an example, about a week ago, we sold an Amazon FBA store for about 1.35 million at a 7.5x EBITDA. So some of those really high quality assets can creep up into the 6 or 7s, but realistically, you're probably going to be somewhere in the 2 to 4 or 5x range in some of these higher value in the higher value range. Keep in mind, it's a bit of an art and a science when it comes to valuing these businesses and what these businesses are going to go for. There's a little bit of timing and luck involved, certainly, when these businesses sell. And as we continue to go through this webinar, we'll talk about some of the things that you can start preparing for and exit planning for today. So when you're ready to sell your business 6 months from now, a year from now, 3 years from now, you have your ducks in a row, which can actually help to keep your multiple higher than not having kind of your information properly there and ready for a potential buyer.
Great. So, what we've seen is Amazon is obviously the dominant player in the marketplace. Can you go to next slide, Julia? Just from these numbers, Amazon controls 41.4% of everything sold online in the United States. This is just an amazing figure. If you look at the Amazon marketplace line at the top, that's third-party sellers. So just third-party sellers is about 25% of everything sold online in the US. This is a massive marketplace and also a massive, opportunity. And Julia, if you go to the next slide, we can see that 25% that third-party sellers control right now on Amazon is, in 2021, that was $390 billion in sales. These are just astounding figures, and they've continued to grow year over year. I'm sure in 2022, we're going to see this surpass 400 billion in sales for third-party Amazon sellers. And I don't see any, slowdown in sight. The consumer is still very strong at this point, and Amazon's penetration is just, it's really amazing what they've been able to produce. There are over 60,000 Amazon sellers right now that are making over $1 million in sales per year. And if you go to the next slide. So I want to read this quote. While many sellers believe that they should sell on other platforms to increase their valuation, aggregators do not necessarily see the value in the diversity unless the sales on these platforms are significant. So essentially what I'm getting at, and I've seen this, personally, and from working with customers who are trying to sell their business, a lot of people ask me, should I launch on Walmart? Should I launch on eBay? Should I focus on these other platforms? And most of the time, the answer is no. You should stay focused on your current Amazon business. I've tried doing this in the past. I've tried with my brands to launch on eBay, to launch on Walmart, to launch on some marketplaces in the Middle East or in Europe. And one, it takes a lot of time away from your operations. Managing multiple marketplaces just gets way more complicated very quickly, especially if you have a big catalog. So where I've seen the best success is where founders or entrepreneurs are focusing their business on what's working. They're focusing on Amazon, and they're continuing to expand their presence on the platform that has been working. From my experience, I was able to maybe get, I think, 2 to 3% sales growth by launching on Walmart and eBay. And that was absolutely nothing when you compare it to the amount of time it took me to build out all those listings, to manage now 2 different marketplaces, and to manage advertisements for both of those. So the point here is just, really stay focused on what's working. Stay focused on your specific niche on Amazon. And if you want to expand into, other product categories or other products within your same category that are either complementary or substitutes. That's where we really see the best type of growth for the entrepreneurs that we work with. Next slide, Julia. So what's been happening in M&A for e-commerce businesses? If you go to the next slide, I just want to talk about this a little bit with both Ray and Vero. So first of all, Ray, if you could just tell us a little bit about, what you've seen so far in 2022 in terms of, the amount of deals that you've been seeing, the multiples, and more importantly, what you're expecting for next year. Have you seen any types of slowdowns in the last couple quarters?
No, really great point. We haven't seen a slowdown. In fact, we've seen a massive increase on both buyer interest on Amazon FBA stores, as well as the number of business owners, the number of sellers that are interested in exiting and understanding what that looks like. We're incredibly bullish for 2023 and kind of what that holds. There's been a lot of kind of doom and gloom. You'll see it all over LinkedIn and social media about kind of the aggregators failing. And I just don't believe that. The aggregators haven't failed. They're just now building the brands that they purchased. The thing to remember, and the thing that we're excited about at Flippa, is we've got 25,000 new vetted and verified buyers that sign up on the Flippa platform every single month.
Wow.
Month. There is so much buyer interest outside of just an aggregator. There's high net worth individuals that are sitting on $1 million of cash in their bank, $10 million of cash. I spoke to somebody earlier today saying, hey, I've got $50 million in the bank. We verified it. He does. And he's looking to buy 10 to 15 different Amazon FBA stores. Like, this is the types of conversations my team is having.
That's an individual sort of just trying to start their own aggregator, essentially, right?
Correct. That's exactly what they're trying to do. And they're doing it. On Flippa in 2022, and we're not done yet. We sold roughly 20,000 businesses on our platform. And 10-12% of those are Amazon FBA, and that's continuing to increase. So there's no doom and gloom right now. It's a really, really great market. What we are seeing is the multiples starting to settle. So they really peaked over the last couple of years, and now they're starting to settle to a place where they probably belong, right? Somewhere in that 2 to 4, 5, 6x EBITDA range, which is still fantastic for an Amazon FBA business.
Yeah, and really, a fair price for both the seller and the acquirer. No, it's really interesting to hear that. I work with a number of Amazon sellers. I have a couple who are interested in exiting, and on the flip side, I have a couple customers who may own 1 or 2 businesses currently, and they're looking to expand. They're looking for other products, in their niche that they can, take over and, really try to create their own sort of mini aggregator within the Amazon system, which has been, really interesting to see.
Yeah, let's not forget the aggregators still are buying. So they're still very, very active and interested. They're just not as risk adverse as they were a year or 2 years ago. They're really looking for high quality businesses across all different ranges.
Yeah. And would you say aggregators probably focus on higher value businesses?
Definitely. And for us, and we have relationships with most of the aggregators, as you can imagine. Their minimums that they're looking for, typically, not everyone's the same, are minimum of $1.5 million in revenue. Typically, some of them are looking for minimums of 10, but right around 1.5 is where the aggregators are going to start to hold interest.
Yeah, that's when they'll start to get interested. Great.
Yeah.
Well, thanks. I think we can move on to the next slide.
Cool. So I'll jump in here, and the logistics of selling a business. There's a lot that goes into it, and if you go to the next slide, some of the questions you should start to think about right now are, how early do you start thinking about selling your business? The answer is, if you don't even know if you want to sell your business, you should start thinking about selling your business now, because if you do end up at that point down the road, it's incredibly important to start putting the pieces together and make sure that whatever your exit plan looks like, you're set up for success when you're discussing with potential buyers. Okay. So I'll talk a little bit about that here in a second, but how long will it take to sell my business? It's the question I get every single day. And look, the answer is, it depends. There's so many different,
It always does.
yeah, there's so many different things that goes into it. Now, historically, I can give you some numbers, right? An Amazon FBA business that is in the 100K to $1 million range, right in that valuation range. On Flippa, it takes 87 days to sell. All right. What that should tell you is I've seen those stores sell in 10 days. I've seen those FBA sell in, 6 months or 9 months. So take those numbers with a grain of salt. The larger businesses, the 7-figure, the 8-figure FBA stores, take anywhere between 6 and 12 months. There's a lot of due diligence that takes place. And the really important thing to remember is the buyers, they're ready to buy. What takes so long is typically on the business owner's side and making sure that they have the information the buyers are looking for during the due diligence process. A lot of times it's messy books. A lot of times it's no SOPs, no standard operating procedures. A lot of times it's they've intermingled their business finances with their personal finances. And you have to untangle this web of information in order for the buyers to move forward. So that's why it's incredibly important to start thinking about selling your business today, so you can start getting the pieces together that you need to get together, which I'll talk to on the next slide. When's the best time to sell? Look, again, you're going to get a lot of it depends from me, but the best time to sell, at least to see a deal go through quickly, is when your business is profitable, has some age, and has opportunity for continued growth. What you don't want to do as a business owner, if you want to exit, is to exhaust all the growth opportunities that you have. You want to leave a little meat on the bone for a prospective buyer to come in and grow it to the next level. The other thing that I see happen far too often is you make the decision that you want to sell your business. That's fantastic. People stop running their business when they make that decision. The second you stop running your business,
big mistake.
The value of your business goes to nothing. and I'm sure my colleagues on the call here will agree. Do not stop running your business. You have to, if it takes 6 months to sell the business, run the business for 6 months while you're doing it. Worst thing you can do is start putting your energy onto the other things. All right. And then we've already talked a little bit about multiples and how much these businesses sell for. There's a lot that goes into it. Age of the business, the niche of the business, right? Are you an FBA that focuses on clothing and jewelry, or one that focuses on something even more niche, like something in the home and garden space, right? Those are going to play a role, and it changes, right? What's hot at the moment today will be different a year from now or 2 years from now, and that will affect multiple. So what your business is worth today, don't always count on it that it's going to go up because you're in a profitable niche today. It can change very much with the economy and what's hot and what's not hot right now. So, you have to consider kind of all these factors. Just because it's worth something today, you don't know what it'll be worth tomorrow, depending on market conditions. If you want to go to the next slide.
Yeah, real quick question just on
please.
Yeah, on the best time to sell. I'm just curious if you do see a large increase or decrease during any certain time of the year, like maybe at the, after January 31st, everybody gets their books in order anyways.
Yeah, we don't. We actually don't. And, when I first came here at Flippa, from my previous experiences in my personal career, there's always been some sort of seasonality to everything that I've done. We at Flippa don't see the seasonality that you would expect. We sold a $9 million deal that finally went through on Christmas Day last year. So deals get done when deals get done, and there's no stopping when a deal is going to get done. We don't see the seasonality. Now, we deal with a lot of businesses, so I would imagine that there probably is some seasonality, but we don't see it here at Flippa.
Fair enough.
Yeah.
Great, thanks.
Yeah, good question. So the next slide is know your numbers. And I alluded to this a little bit earlier. If you want to go to the next slide, it's really more than just knowing your numbers. But these are kind of the top 8. And in all honesty, there's probably sub letters 1A, 1B, 1C, 1D under all of these that are incredibly important. But arguably the most important thing when getting ready to sell is have your books in order, have your accounting practices clean. If you don't have an accountant or a CPA or something of the sort, if you're doing it yourself, go pay somebody to do it, because it will save you money in the long run. I promise you, I promise you, I promise you, I can't tell you how many times a business owner goes to sell, the buyer looks at their books and goes, something's off. And then it just decrease. I've seen people lose hundreds of thousands of dollars because of bad accounting practices. Okay.
Accounting is probably my least favorite thing to do as a business owner. And
It's
oh my God, once I hired a CPA firm, it was just like a sigh of relief, not having to deal with that. As an owner, you want to do things that push your business forward, not, keep track of numbers in a.
That's it. That's it. Exactly. 100%. Make sure you have your verified financial statements. Make sure you understand your add backs. It was talked a little bit about a little earlier today. Understand what the business trends are in your business. Have your SOPs, arguably the most important thing. Number 2, have your SOPs ready to go. What's an SOP? It's a standard operating procedure. It's if it is a repeatable task, have that repeatable task written down from start to finish, and you're going to have lots of repeatable tasks in your business. There's so many that you'll think of over and over and over again, because what's going to happen is whenever the buyer takes over the business, they're going to want to be able to take your roadmap, your SOPs, and just continue on, right, with what you're doing. You're going to want to understand your key seller metrics and indicators. You're going to want to understand your competition. And then, of course, you're going to want to have all of your seller agreements in place, ready to go. You're going to want to store all of this in a data room. You can use Google Drive as a free data room, and you're going to have folders, accounting practices, verified financial statements, add backs, business trends. You're going to have folders for all this information. And then when you're ready to exit and a buyer, you come to Flippa or you sell it somewhere else, you're going to have your information ready to share with that buyer. And they're going to be so thrilled that you have your house in order. They'll move a lot faster. They're more keen to work with you when you have your house in order. If they come in and you have a messy house, they're going to go looking for everything that you scraped under the rug, and it's going to lower the value of your business, and it's going to lengthen the time that it takes to sell your business. There's a link here, and what I believe we'll do here is we'll send this link out to you guys with a sample due diligence report. So at Flippa, we offer due diligence services. Feel free to take this sample due diligence report. If you're a potential buyer on this call, steal this due diligence report and go and figure out all the stuff that you want to do. You can do it. If you're a seller, take a look at this due diligence report, or a potential seller, and start putting your house in order based on what's in this due diligence report. It will make your sale and your future exit, your potential future exit, so much cleaner. So I would advise you all to look at this. You can also check it out on flippa.com/due diligence. Next slide.
All right, so now we're going to get into the advertising section of the presentation. So, if you're an Amazon seller, you likely already know the importance of advertising, hopefully. Amazon has really become a pay-to-play platform. They've increased ads on their platform significantly over the past 3 or 4 years. In addition to that, we see that our customers get about a little bit more than 50% of all sales come directly from advertising efforts at this point. It's pretty amazing. Amazon has been investing a lot into their advertising platform. And in addition to that, the platform is constantly changing. Just a couple examples, over the past few months, Amazon has added new placement adjustments for sponsored brand campaigns. They've added video placement for sponsored display campaigns. Those are just a couple of examples, but over the last 3 years, we've really seen the Amazon ad advertising platform, transform, and it's growing significantly year over year. So if we could go to the next slide, I'll have Vera talk a little bit about, what things you can do in order to optimize your advertising.
Yeah, well, more than what to do to optimize, because I think that would be a whole webinar, right? But more of like the importance of advertising and optimizing that part if you are preparing to sell. And I think I echo what Ray was saying earlier, that I don't think the activity in the market is going to go down, but definitely buyers are going to be a little bit more strict with what they're looking for, based on the whole economic landscape. And so I think profit margins are basically going to become the key metric for a lot of businesses, versus maybe a year or so ago, you could focus on growth or potential or whatever. And as he was saying, maybe take a little bit more of a risk on. So because profit margins is going to be the key, or that's what I'm betting, it's really important then that you are optimizing all your costs, and not, as you mentioned, a big cost for a lot of sellers is advertising, right? With 50% of their sales coming from PPC. So, and obviously also, growth I think will keep being kind of the second most important metric, and that advertising, again, an optimized advertising strategy can do both. And again, remember that we talked about multiples. There is going to be this multiplier effect. So there is this compounding effect where, if you think about it, every $1 of more profits can lead to $2 to $3 more in your valuation. And if we talk percentage wise, if you decrease tacos by say 5%, or even say if you increase ROAS, which is usually what we focus on for a lot of our clients, increasing ROAS, well, we increase ROAS. 50% of sales are advertising driven, so then that decreases the tacos, say like a 5%. I think it's around what we managed to do for our clients pretty quickly. That can lead to 10 to 15% increase in valuation, where you consider, okay, now you have higher profit margins, which means you're more attractive, which means you deserve a higher multiple that gets applied to a higher SDE or EBITDA. And obviously that's like kind of if you keep the budget the same, or if you just focus on cutting down wasted spend, which is a lot of what we do. But if we also focus on expansion, then you also have higher sales, and that's when you can even get maybe a 20% increase in your valuation. So there's a lot of compounding that can be done if you really optimize such a big expense, as such an impactful expense as your advertising can be.
Yeah,
And
really helpful. We could go to the next slide. Obviously, advertising is a huge portion of your budget every year. So anything you can do to optimize or decrease what you're spending with the same expected results is going to pay you out multiples when you go to sell your business. So the question, should you change your advertising strategy when working towards an exit? As Ray likes to say, the answer is it depends. Really what you should be thinking about is have you done everything you can to maximize your profits? That's really what we're getting into, maximizing that number that will get a multiple applied to it that you'll get paid out. That's what you should be hyper laser focused on. So I'm going to go through a couple of ways to do that. So first of all, it's about understanding which products are, have positive margins. From experience, I have a couple of customers I work with who are launching new products. They're thinking about an exit. And when we dive into the dashboard, we can see that some of their new products have negative margins. They're losing money on these products every month when you consider all the fees, the cost of goods sold, the advertising, and the Amazon referral fees. So that is something that you could change very quickly. If you're spending too much on advertising, you need to draw down your advertising strategy. When things are working and you do have a profitable product, the best way to understand how to make certain bid adjustments or increase or decrease your advertising is to understand your impression share report based on your targets. So I'll go into a little bit more detail here. If we could go to the next slide. I'm going to give a quick example of what this looks like. And again, this is for one of my products. The left side is the search terms. So what specific either products we are targeting in terms of ads, or which keywords we're targeting. This is for a scuba diving mask product that I sell. So you can see the ones highlighted in green are potential keywords where I would say there's an opportunity to bid up. That is because the search term impression share rank is relatively high. This ranks you among other advertisers on Amazon. So 1 means you're getting the most impression share, where the higher the number, the less impression share you're getting. Then the search term impression share percentage in the second column shows you how likely is your ad to show up when people search for that specific product or specific keyword. So this is what we look at. And then the column on the right side shows you your return on ad spend, or your ROAS. So the ones highlighted in green are keywords that have a relatively strong ROAS. I'm very happy with a ROAS above a 4. That means my product is guaranteed to be profitable, and I want to increase that spend as much as possible, as long as I'm hitting a target of 4 ROAS. So when I see that Scuba Mask, for example, has a ROAS of 6.5, and my search term impression share is only 3%, this tells me that there's an opportunity to bid up on this keyword. I want this ad to show up more, and I'm willing to pay more, because even if I increase the amount I'm willing to spend, that you can see the cost per click here is 96 cents. So maybe I'm willing to pay $1.20, and likely my ROAS might dip a little bit, but as long as I'm staying above that 4 target and getting more sales, that's going to translate into higher profits down the road. And the same is true for these, keywords highlighted in red, like snorkeling gear for adults. I have a very low search term impression share, but it's leading to no sales. So that's something that, I probably want to pull back on a little bit. Same with that first, that's a ASIN in the top left, but that ASIN we're targeting is only leading to a 2.3 ROAS. So that's something where, I might want to dial back a little bit on that bid, so I'm not paying as high of a cost per click. If you can go to the next slide, it's also just important to be able to have all this information at your fingertips. This is one of Mayan's what we call our profitability dashboard. So it can quickly show you, and pulls in all of your data from the API. We also have our customers input their cost of goods sold, so we can give a really good, pretty accurate description of what their gross profit is and what their net margin is. So you can see that one of my products did $15,000 over the past 30 days. There's then a calculation for the product cost. It shows me how much I spent in advertisement. It shows me what my commission fees were for Amazon referral and FBA fees. And then it pumps out a gross profit number. So this is what I want to be hyper focused on, this gross profit number. And I want to track this month over month, week over week, to make sure that this is improving. I want to obviously improve my gross profits, because this is what is the most important when you're looking to eventually sell your business down the road. So next slide. So we have one more section. We're going to go through the Flippa case study after this, but just a reminder, if you are interested in learning more about the Mayan advertising services, sign up for a free audit. We connect directly to your account. We pull in your specific data for the past 90 days, and we'll give you very specific recommendations on what can and should be improved and what type of strategy you should implement in order to increase that gross profit down the road. So I'll turn it over to Ray with the case study. Oh, I think you're on mute. Happens all the time.
2 years of these Zoom calls and I haven't figured it out yet.
We're still learning.
So if you go to the next slide, just kind of a quick brief reminder of what we do here at Flippa and what my team does. We match high quality business owners with acquisition fit buyers, and we do that through expert advisory and a world-class technology platform. People forget that Flippa is a tech platform, and then my team is that layer of advisory that works with both buyers and sellers to match the right buyer, the right acquisition fit buyer with the right type of business owner. And we do that from assets that are worth $10,000 to assets that are worth $100 million. We've sold them all, albeit not as many 9-figure businesses as we like, but it's happening more and more, which is a good thing. If you go to the next slide, I'm going to walk you through actually 2 case studies. This is one that I can publicly share. This is a smaller asset. It is literally in the fishing space, eTackle Pro. you'll notice that it was a profit margin of only 2.1x. And I want to kind of share why this profit multiple was 2.1x versus the other deal that I can't share much information about because it's a confidential listing. But that other asset I'm going to talk about was a 7.5x. And I want to walk you through kind of the differences between a 2x business and a 7x business so you can have some ideas. So this particular business is in the sports and outdoor niche. Right now, the sports and outdoor niche, just as a whole, has a little bit smaller profit multiples that we're seeing. It's just the nature of the market that we're in. It will unlikely be that way forever. Markets ebb and flows, niches ebb and flows. Right now, this one is just a niche that is not as coveted. All right. It's young. It's listed here as 3 years, but at time of sale, it was only 2 years old. So it's a young business, hadn't had a lot of traction and hadn't built a lot. It was also in a niche and a price point that there are a lot of these types of businesses for sale at the moment. There just are, right? So simple supply and demand drove that profit multiple down a little bit. The other thing to keep in mind and why I kind of harped a little bit on the accounting side of things, this business had messy books. They hadn't had an updated P&L for about 18 months. So coming in, they were already kind of shooting themselves in the foot. The buyer was able to, this was listed at about $300,000 originally, as you can imagine. And the buyer was able to come in and poke all the holes into the issues with the business. And the buyer did this on purpose because they knew they could. They knew that they had a buyer here that was really wanting to sell. It's a good business with lots of room for opportunity, but it was a seller that just did not have kind of their business in order. Still sold, cash buyer. It sold in about 90 days. Let me double check. I'll tell you exactly how long it sold. 108 days, excuse me. And there were 95 interested buyers, vetted and verified buyers kind of bidding on this business, interested in bidding on this business. So it had a lot of action on it. But all in all, the poor accounting aspects of it really just kind of shot this business in the foot. The 7.5x, which I don't have a slide on here for, but I'm going to talk you guys through it. It's a confidential listing. It sold on Flippa 15 days ago for $1.35 million. It was in the health and wellness niche, which is a niche that is flying right now, right? So it certainly had that going for it. We're seeing profit multiples going through the roof.
Was it a product or an ingestible?
It was a product. It was a product. Yeah, ingestibles.
Yeah, those are a little
low valuations at the moment. So it was a product. It was a product.
Gotcha.
Yep, it was a product, not an ingestible. Ingestibles really low multiples for ingestibles at the moment. Grade A, 6-year-old business, had been running for 6 years. 50% profit margins compared to this one, 24%. By the way, 24% profit margins in e-commerce is fantastic. It's really good. But 50% profit margins through the roof. I mean, that's quite unbelievable. They had patents. They designed and patented their own product, right? So that was involved in it. And then the most important thing is they already had a data room with all of the major DD components ready for the buyers. Their accounting practices, their verified financial statements, their SOPs, among other things. And they also had a bit of timing and luck. It was purchased by an aggregator. They purchased it in 18 days, cash. Wow. 18 days cash. This aggregator had a mandate that they had to buy a business just like this in a certain amount of time. And so timing and luck certainly plays a role in some of this. However, this is still an asset that was going to sell at a high multiple. And that's kind of the differences. Have your ducks in a row. The difference between a 2x business and a 5, 6, or 7x business is making sure that you have your I's dotted and your T's crossed. Use that due diligence report that I've shared in the chat for you guys. Save that. Use that as kind of a blueprint, whether you're on the buy side or the sell side, as what you need to start preparing for as you look to an exit tomorrow at some point. Cool.
Great. Well, thank you so much, everybody, for joining. Ray, that was really good information. Really happy to have you. And yeah, I believe we have a little bit of time for questions, but if there aren't any, I guess we will just sign off. All right.
Cool. Thanks, guys. Thanks for having me. It was a pleasure to
Yep.
chat.
All right. Thank you, everybody. We'll be in touch. And again, we'll send this recording out after the call for everybody who joined. All right. Well, have a great rest of your week. Talk to you all later. Bye.